So normally when a software monopoly hits record revenue and pulls in literally hundreds of millions of freemium AI users, you expect a massive victory lap. But Adobe just decided to pair their new earnings with a missing CFO and a sudden hunt for a new CEO. Welcome to Earnings Unscripted. It is June 11th, 2026, and today we are looking at Adobe's second quarter, ticker ADBE.
Yeah, and Wall Street definitely did not want a victory lap. They wanted a life raft. The tape on this reaction is just brutal.
Oh, it really is. And before we completely tear into that life raft, quick reminder that this is just two friends geeking out over markets, not financial advice. But Mira, you were watching the tape. I mean, what exactly happened after the bell?
Pure panic. Look, the stock was already bleeding going into the print. It closed down almost 5% just in the regular session. But the second these numbers dropped, it fell completely off a cliff in after-hours trading, down 11.4%.
Jeez.
Right, it just flatlined around $206. And it is fascinating because the top-line numbers are actually perfectly fine.
Yeah, let's establish that baseline real quick. So total revenue actually grew. It came in at $6.62 billion, which is up 3.4% from last quarter. But then you look at the profitability and it just sort of
goes entirely backward. Yeah, GAAP operating income dropped to $2.24 billion. That is down about 7.4% quarter over quarter. And your diluted GAAP earnings, they slipped to $4.25 a share, down from $4.60 last quarter. So they are definitely making more money, but they are keeping noticeably less of it.
Right. The margins are taking a very visible hit, and management is openly admitting this is intentional. They're actively delaying their own price hikes on Creative Cloud to push this massive freemium AI strategy instead, which is a huge gamble for the company that basically dictates how the whole digital design world operates.
It is the classic walled garden problem. You have to open the gates if you want to capture the next generation of users. Adobe is basically giving away AI tools to habituate people before locking them in. But a pivot like that requires flawless internal execution, and you're attempting it right as your CEO, Shantanu Narayan, is transitioning to board chair.
Yeah, and Dan Durn, the CFO, is just abruptly leaving the software industry altogether. Talk about terrible timing. You're losing the two people holding the map right when you drive off the paved road.
Exactly. Markets can tolerate margin compression if they trust the pilot. But when the pilot and the navigator both grab parachutes on the same day, investors just hit the sell button, especially when you combine it with operating cash flow plunging.
Oh, wait, I actually did not realize the cash flow took that steep of a dive. We definitely need to look under the hood on that. All right, let's get into the details and figure out what's really going on here.
Yeah, so that cash flow drop is exactly where the real story lives. Operating cash flow fell right around 27% quarter over quarter, down to $2.17 billion.
Okay, but to be fair, they just bought SEMrush. Didn't that completely drain the checking account?
Yes and no. The total cash balance dropped almost 20% because they paid $1.9 billion in cash for SEMrush. But operating cash flow is different. That is their day-to-day cash generation. The reason that metric is shrinking is largely because their marketing and compute spend is just redlining. They are aggressively buying users.
Right, because of the whole freemium pivot. But how exactly are they spending that cash? Are we talking traditional ads or what?
No, it is way more targeted than that, and a lot more expensive in the background. They are heavily buying search traffic to intercept AI intent. Think about it. Someone goes to Google and types, "summarize this PDF." Adobe pays to be the top link.
Sure, but if I click that link, I am definitely not buying a subscription right there.
Exactly, and they do not even want you to. You click it, you skip the typical Adobe sales page entirely, and you get dropped straight into Acrobat Web. You upload the PDF, the AI assistant summarizes it for free, and you just keep working.
Oh, wow. So they are eating the massive search engine marketing cost, plus the AI compute cost, just to keep you inside their ecosystem before you wander off to, say, ChatGPT?
That is the exact play. I actually scribbled down a quote from the transcript because it is so revealing. It was from VP Wadhwani. He basically said, "Our traditional direct-to-paid journeys may not always fulfill visitor intent, as a growing number of new users are first looking to quickly complete their intended task."
That is a very polite, very corporate way of saying, If we put up a paywall right now, these people will literally just go somewhere else.
100%. They are terrified of losing the top of the funnel, so they are essentially replaying their own 1990s playbook.
Wait, you mean the Acrobat Reader playbook?
Right. Give the basic tool away for free to create a universal standard and then monetize the power users a decade later. They are doing the exact same thing with the Firefly AI funnel right now. Habituate first, figure out the monetization later.
Okay, I actually love the logic there. It makes total sense for a legacy giant trying to defend its moat. But if you are an investor, you still want to know exactly how much that AI habituation is bleeding the core profit margins for things like Photoshop and Illustrator.
Well, that is the brilliant part. Adobe already made sure you cannot see that.
What do you mean?
In the first quarter of this year, they quietly smashed their traditional operating segments together. For years, they reported digital media and digital experience separately. You could see the distinct profitability. Now, it is just one big consolidated black box.
You are kidding. So analysts completely lost visibility into the standalone profitability of the legacy design unit?
Yep. You cannot trace how much the classic design suite margins are eroding under the weight of this new AI compute cost. It's completely obscured.
It's just wild to me that companies get away with suddenly blurring their financials right in the middle of a massive strategic pivot. It feels like they're saying, don't look behind the curtain, we're undergoing renovations.
I mean, it is perfectly legal accounting, but it requires the market to implicitly trust management's vision, which circles us right back to why losing your CFO and hunting for a new CEO at this exact moment is causing such a violent reaction.
Yeah, the timing really is genuinely terrible. You're basically asking Wall Street for blind faith while your navigation team is packing up their desks. So I guess the big question now is really about execution. Are these millions of free users actually going to stick around when the credit consumption models and paywalls finally do go live?
That is exactly the multi-billion-dollar bet. Look, their guidance for next quarter basically assumes steady momentum, targeting revenue right around $6.7 billion. But what really stood out to me was how the new interim CFO, Steve Day, justified their entire outlook for the year.
By leaning into the delayed monetization?
Right. He explicitly stated that their 10.2% growth target, well, it now officially reflects the choice to defer those planned Creative Cloud price hikes. They are literally hard-coding the delay into their own guidance.
So they are fully committing to the long game, which honestly, it feels like they kind of have to. Because if you zoom out from just the margin pressure, their broader strategy is really to play the ultimate aggregator.
By turning their tools into headless APIs.
Yes, exactly. They are rolling out these new creative agents and just embedding them natively into Microsoft Copilot, into ChatGPT, Google Gemini.
It neutralizes the language model wars completely.
Right. It literally does not matter to Adobe if Google or OpenAI ends up dominating the foundation models. Because if you are typing a prompt inside Claude and you ask for a complex design edit, the actual execution can still run quietly through Adobe's engine in the background. They just stay relevant everywhere.
On paper, sure, it is a beautiful structural hedge. But hedges don't run themselves. That kind of complex defensive ecosystem play requires flawless execution, and you are attempting it right as your old guard in the C-suite is essentially packing up to leave. The friction there is immense.
It really is. Next quarter is going to be the absolute proving ground for whether those millions of freemium users finally start converting to paid or if they're just very, very expensive visitors.
We will find out soon enough, and we'll see if the interim team can hold the line.
Let's hope so. All right, that feels like a solid place to wrap up our Adobe coverage. We will definitely be tracking those conversion rates in Q3. Thanks for hanging out and thinking out loud with us, everyone.
See you out there.
If you enjoy pulling apart these filings with us, just follow the show so the next deep dive drops right in your feed. As a quick reminder, we do use AI tools to help produce this podcast, but all the hard facts, like the exact revenue figures, are strictly pulled from real company reports. We're always looking for new companies to cover, so feel free to shoot your ticker requests or any thoughts over to earningsunscripted@datamadness.ca.
Catch you next time.